Check, check, check 1, 2. Okay, it is February 21st, Monday. It is President's Day. The US markets are closed today. I want to go ahead and explain what my one single trading setup is that I've been trading day in and day out since September 1st of 2021. And it is a setup that I have on a screenshot here. I'm going to go through some screenshots and explain exactly how I'm getting in and out of these and why this is so successful and why it has an edge in the market. So it starts with context. Here's a daily chart. This is Rivian. It looks like it's in January of 2022. This is the daily chart of Rivian at this day, and the context and narrative and sentiment of the name is extremely important because it affects the intraday moves significantly. Here in this Rivian, we see that this daily chart bar is breaking some technical levels. I don't remember if there was fundamental news on this day as well, but there is clearly a breach of some technical levels. We are breaking down, and that forces certain participants in the name to make choices. When major technical levels are breached on a higher time frame, like a daily, weekly, monthly, long-term players who have size are forced to make choices. And when they're forced to make choices, they're not always made in the cleanest ways. Sometimes their executions are sloppier. That provides opportunity for us smaller fish, or for me at least, to be able to take advantage of those inefficiencies and those urgent entries or exits as those larger players move positions on and off their books. And so for me, everything starts from the wider time frame context. Here we have Rivian breaking down from a somewhat major technical level. It's not as major of a technical level like this day was right here, or even this day. I did trade Rivian on both of these 2 days, I believe. Maybe I have the screenshots in here as well. So there was definitely a big breach of the IPO level back here. That's a huge, major deal. So this also is a less significant level that got broken, but still over a week's worth of trading level broken and starting to move lower. So that's the first step, is the context. Are there technical levels that are being breached that are major? Are there fundamental changes or catalysts that are at play? Rivian is an electric vehicle manufacturer. Did they have some bad news or good news about their vehicle manufacturing process or delivery process or anything in between? So those types of fundamental changes have an effect, because that is an overlying narrative, or underlying, I guess, narrative and context for the intraday moves that happen. After I have identified a wider context that I want to look closer at, then I can start moving into the intraday analysis. But one of the things I want to be careful about, and I try not to trade these types of days, is days like these that are in the middle of noise. Similarly, these days are in the middle of what I see as noise on the daily, on the higher time frame, and I try not to get involved in those because it's just they have a lower win percentage. They sometimes they run, sometimes they don't. I've noticed a much higher win percentage when there's a clean break. Not using trend lines. I don't use trend lines. I only use horizontal lines that show clear technical levels being broken or held. And so when a daily candle is in the middle of noise, I typically do not even initiate a trade, even if it's a juicy looking setup. So if I see that the context is there, and here Rivian is starting to break down, so I'm looking for more downside possibly. Let me zoom back in on this. It's starting to break down. I'm looking for more downside, maybe to these levels on this break here of this day, maybe down to here. Then I start looking at the intraday levels. And what I saw, and actually this is a time I need to talk about the significance of pre-market and high and low levels, pre-market high and low. So when a name is in play because of fundamental news catalyst or a large technical level being breached, and there are large players that need to make moves, so they're forced to make choices, the pre-market levels are significant. in my thesis. The reason why is because the pre-market levels after a major piece of news or technical level has been breached are the levels that the larger players are willing to let the name trade within, but not beyond. In other words, the pre-market high is as high as the larger players were willing to let the stock run up, and the pre-market low was as large was the level as low as the larger players were willing to let the stock drop. And so those levels are very important on an in-play name, especially off of fundamental news, but also off of large technical level breaches. If the stock starts trading through and breaching those pre-market highs and lows on the open, then that shows that the participants who are in there are now willing to push past wherever that last institution held it in the pre-market. Thus, there is more that provides more momentum and more energy into that direction. So we'll get into more of that, but I don't even have the pre-market levels listed here on this screenshot, so I'll show a different screenshot as we get through it. But the pre-market levels are significant. The next thing I do is I look at the tape and read the tape for an active buyer or seller. So I don't trade anything if it's still in between the pre-market high and low ranges. I wait for a crack of those pre-market high and low ranges on in-play stocks so that I know that we are breaching a level that major market participants were previously holding. And after we breach a pre-market level, whether it's the high or the low, in this case on Rivian, it'll be the pre-market low because the name is moving down. I am looking for an active seller, in this case on the tape. So what that looks like is bids getting hit, offers stepping down to replace those bids, more bids getting hit, offers stepping down, offers getting sprayed and not lifting, refreshing, icebergs on the offer, offer stepping down, large size being taken on the offer but the offer not lifting, large prints going off on the offer and then the offer stepping down, those types of things. I have a bunch of videos on tape reading, identifying that kind of stuff. So if you want more information or video recordings on that, you can check that out. But basically, I'm trying to identify an active seller in that situation, in this Rivian case, or an active buyer if it's to the upside. After that, if I've spotted an active seller or buyer, then I try to find an entry. I use the footprint to identify an entry place, and the footprint is this set of numbers right here. And right here, each of these is a footprint bar. For this chart screenshot, it's a 9-minute footprint bar. So it resembles the price levels within a candle and how much volume was done at each of those price levels. So if we look at just this example here, this was 0 or less than 1,000 shares traded on the bid, and then 7,000 shares traded on the offer. And then let's look at this right here. This is 26,000 shares traded on the bid, and this is 23,000 shares traded on the bid. And the volume profile you have on the right here is what I added in Sierra that renders the total size traded at that price level. So how I use this is I visually am able to look at the volume profile, identify large nodes that stick out, and then I go and zoom in onto the footprint specifically to read what the executions were, what the sizes were, and what side of the market they were on. So in this case, we had a big breach, a drop, and I can see just visually that this is the largest node. So I come over here and I see 23,000 was transacted on the bid with 8,000 on the offer, and then we traded lower, and then another 26,000 happened down here at $94. And that's kind of what I'm looking at as I'm reading the footprint. I'm looking first at the volume profile for large nodes of interest, and then I zoom into the actual underlying raw numbers to see how much volume was transacted at those levels. For determining an entry, what I look for is I never chase the momentum to the downside or the upside. I wait for it to come back into me in the form of a pop or a pullback. In this case, it's in the form of a pullback. And what I wait for is a large amount of volume to come in. Down here, this row of values is the total volume in thousands of shares for the bar that it represents. So this represents 312,000 shares. This represents 163,000 shares, 195,000, 126,000. And the numbers above are the deltas for those bars. So 46,000 more shares were transacted on the bid than on the offer. Here, only 4,000 shares transacted on the bid more than the offer. Here, 2,000 shares more transacted on the offer than on the bid. So you can see the coloring, the largest volume of the session within the top 10 to 20% of largest volume of the session is highlighted in yellow, so I can very easily spot exhaustion, volume exhaustion candles and things like that. So what I look for is a big volume on a drop of a crack of pre-market lows, and I watch for the volume transacted on the way down. And so as I stare at this, I can easily see that here's a big node. This was at what, 94.60s, 94.50s? Okay. And then down here, 94 did some volume, and then it looks like there's some volume here at 93.40. And so when I look to spot an entry, what I try to do is find a place where there are these large volume nodes. Why? Because if we return to these prices and the seller is still active, remember I spotted the seller earlier, if the seller is still active and if we return to these prices, the seller has more to sell in this thesis of mine, and they will want to quote unquote defend those prices. In other words, if they get a chance, if we're trading down at 92 and they get a chance to sell at 94, they're gonna do it if they have more to sell. Why? Because they're gonna get paid better. As a broker as a trader for a brokerage who's running a large institutional order, you know, if the client wants to sell, they'd rather sell their shares at 94 than at 92. So if the seller is active and has more on their order book to sell, they're going to take that shot if they can get it back up at 94. And you can see like 26,000 shares is not an at-home day trader sitting on their, I don't know, E-Trade account, you know, buying 26,000 shares of Rivian. That's likely a larger player. And so is this 23,000 here. So what I do is I use these as rough areas or zones where I want to initiate my position or place my stops. So in this case, I see some nodes here where I may want to enter a position here, and then I'm looking for a line in the sand. And this looks like it for me. Not exactly at that price, but beyond it, so that if it does continue trading up here, I know I'm wrong up here. So this is how I choose the position. It looks like I placed offers to get short around this 93.70s, around these 94s. And it looks like my stop was above this 94.50 node, somewhere in the 70s or 80s up here. This X denoting my stop. And what happened was, we sold off very hard. There was a very hard pop. I got filled at these two spots. Almost got stopped out, but didn't because these levels were defended. And you can see the volume up here is very sparse, 0, 0, 0, 0. So less than 1,000 shares on all these, with a couple thousand transacted up here. Again, at these levels, seller was like, yes, I want to sell more up here. And then price quickly returned back down to low a day. And that is the thesis, is these types of moves tend to continue. This play is called the opening drive continuation short or long. And the idea is to get in on a pop or a pullback and then look for new highs or lows, or in this case, it'd be lows. So that's what it looks like. In this specific trade, I did get fills. It looks like I got filled on the short side here, and it spiked up here, and then I started covering on the way down into lows, and even had part of my position on for new lows. I kept a runner. So that is the thesis of the play. Let's see if we have any more examples. This is Micron. I don't know if this is a good example. I'm just going through the screenshots that I have saved on my machine. So it looks like we have a big technical level here on the daily, and it looks like it's being breached. Again, the context here, big daily technical level is being breached. I believe Micron had positive news on this day as well. This was like a month ago. I see a buyer on the tape. I see a large break above the pre-market high. Behind this previous day close is a label that says PMH, pre-market high, and that's what this yellow green line is representing, and we break out above it with very, very good volume. I see 103,000 transacted on the offer here at $97. I see a big push through, and what I'm looking for is to get filled somewhere around this large node, because I think that the buyer will continue if they have more size to put on. We have a couple things in our favor here. We have the positive news, and we have the large breach of the technical level to the upside. We have the strong breakout on high volume. We have an active, willing, and able buyer who we've spotted on the tape, and we can see on the footprint. Stock pops up to new highs, comes back. Buyer defends this level. I get filled here, and she continues back up to make new highs. Stop being below those heavy nodes. So if she continues to trade back down here, my trade thesis, my idea is wrong. And it looks like on this I did get filled on that pullback there after that big breakout bar. Sold some at the highs, waited through the pullback, sold some more, sold some more, sold some more, and then it looks like I got stopped out of my last piece runner down here after a failure to make significant new highs. So that's another good example. Let's see here. Looking for another example. These are some other ideas, reversal trades. Here's an example that it looks like I got stopped out on potentially. Let's take a look. Looks like it's breaking out above a technical level here, potentially all-time new highs. It looks like I made a first attempt on this break. Let's take a look here. It broke above pre-market high nicely, did some good volume, good buying here. A couple 100,000 shares, 350,000 shares, 240,000 shares on the offer transacted. Tried to pick it up as it came back in, picked it up just below these nodes, and looks like I got stopped out. I got stopped out there, and then I saw it came and made new highs, and again came back to retest those levels. Those levels were defended by the buyer, and this time I re-entered a second attempt because of the significant new highs after getting wicked out on the stop here. And set my stop below those levels, and she ended up going to new highs, and it looks like that's exactly what I did. Yeah, I bought it the first time here, got stopped out there, and then re-entered, and I believe made it all back and then some. So there's another example. Here's, it looks like an example in BABA, and this video is getting long, so I'll try to keep it short here, but we have a breach of a major technical level here on the daily, coming down. I don't remember if there was news on this day. Started identifying intraday criteria, such as a break below pre-market low on heavy volume. Got the heavy volume here, got the pre-market low level right here. I have an active seller that's identified, 30,000 shares hit on the bid there, another 18 here, selling on the way down. Looking for a pop back up into these levels to be defended near this 113. Get short right there and visit to new lows. And it looks like that's exactly what happened. That was the fill right there. It looks like I had an add to my position down there and just rode this thing from the 1250s, 13s, all the way down to the 110s. Really nice trade there. So this video is getting long here, but this is the setup I've been trading with quite a lot of success, and that is the thesis behind it. Active, willing, and able large institutional buyers and sellers riding their coattails and riding the wave until they finish their order by tape reading and context and using the footprint and volume profile. So hopefully that helps.